What is going on, everybody? Welcome back to another video. We haven't done like just a single individual stock in quite a while, but somebody commented on an older video of mine about Pembina Pipeline Corporation because they know I love the monthly dividend stocks. So I want to go over this one and give you my opinions on this one. So with that being said, let's go ahead, cue the intro, and jump into this video.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. What's going on, guys? Welcome back. Again, PBA, Pembina Pipeline Corporation. Now, this one is you are going to have to kind of give yourself whether you are bullish or you are bearish on a sector in the market. And that sector would be oil and natural gas. Are you bullish or are you bearish in order to do this one? So Pembina does do a decent job. I'm not going to lie to you guys. I want to take you over here. You guys can see this right here where it's going to give you guys the income, which is the blue is the actual and the estimated is the yellow here, down here. I'm not super excited about this one, especially when the actual dips like it did in 2020. Now, that's just me. Now, again, they do pay a monthly dividend, so I think that's very important to say. It's about $33, and they have been consistent with doing this for about 16 to 15 cents every single month. And they do have some special dividends in there. And you can see that they've slowly gotten higher and higher in their dividends. But it's pretty consistent around 15 cents, which is going to give you right now roughly about 6.04% dividend yield annually, which isn't bad. It's about $2 for every $33 you spend. So, and again, it's not bad. My biggest thing is we always want to look at the max. So you guys can always go to this year to date and, oh my God, yeah, we're up 10% already this year. Yes, if you bought on a red day, then all of a sudden it goes up. Yeah, sure, you may be at 10%. Great. What I like to look at is the max. And again, I think more people need to look at this. If you were buying it back in 08 when everything fell, and then all of a sudden, yes, you rode the wave with everything else as it all went up. And now again, back in 2020 when we have COVID, and now it's slowly going back up again, it may be worth it. Now, here's the big problem for me. First of all, financials, not amazing. They do have a lot of free capital, though. That is a big thing to me. So when looking at these is, when you have free capital, again, I like to zoom all the way out, free capital is always a good thing, which means you're probably not going to miss on their dividends, which is a big thing when their actual down here and income was not good. Now, again, you can look at financial ratios, cash flow, and different things like that. And their actual was actually pretty solid for 2020. Not amazing, but it was solid. It was over what the actual right here was. So, or what the estimated was. So it's pretty solid right there. But we want to go and you don't want to just invest into something. You want to make sure that it's back tested, especially if it's already been through certain markets. Now, if you're bullish on the oil market and stuff like that, because Pembina Pipeline is focused mainly on transporting these goods. So again, if you know that there's trucking issues right now in the world, then maybe the stock price is going to hurt. Now, one thing, again, you guys know the rules here on my portfolio visualizer, $500 a week. It doesn't matter what your initial starting amount is. That's just what they gave me. $500 a month, that's the average car payment in America. I think that's fair if you can pay $500 for a car. If you can pay $500 for a car, you can put $500 into the market. That's a little over $100 a week. And if you cannot, get a cheaper car. Just my personal preference here, but QILD, PBA, and HRZN are the ones that we're going to, and then SPY, of course, because we always have SPY in here, is just kind of, or if you just put money into SPY, the S&P 500, and let it run, the ETF. But, as you can see, is PBA actually underperforms the market quite a bit. Now, you're going to say, oh, but they have income. Guys, which is a good thing, don't get me wrong, I love the income too. But how much better is the income? Because you have QILD that's underperforming it quite as well, but HRZN is staying up in here, which is solid. So let's see the income, because I think that's a big thing for a lot of people that are dividend investors and monthly dividend investors when I say that. So HRZN obviously up here. QYLD is obviously a little bit higher than the others. PBA is only at $4,405 compared to a HRZN that's at $8,941, which is almost making 10 grand over the next 5 to 6 years. You're giving an extra $10,000 in income every single year, which is very, very solid. Now again, even if you started with $1,000, which is what most people have to spare anyways, and we just run this again, it's not going to change those numbers. It's going to change the overall monthly income number. And well, in 2021, if you would have started in 2014, HRZN and QYLD, you're still roughly getting about 7 to 8 grand monthly or yearly extra income, which is very, very solid. So with that being said, guys, again, please make sure you know what you're doing here. Be aware of it. Again, don't be trying to get rich quick. I think that's the biggest problem that everybody has. And when looking at all these, you're trying to figure out exactly what you want to put in here. Get rich slow. It's okay. Work. Do the different things. Hustle. Guys, I mean, I'm telling you guys, find a side hustle, sell something, flip cars, flip whatever. We've all done it. Do what you need to do. I do not think PBA is a great stock. Again, I'm not a financial advisor, nor will I ever be. But if you're investing for long-term growth and you're investing for dividend income, there is better out there. Now, I'm not saying to diversify maybe a little bit and grab a few shares, sure. But I'm not even going to put money into it just because I know that there's better in HRZN and QYLD and XYLD and things like that that are going to give me, obviously, first of all, double the income at least, and a little bit more, like 1.25 times, or maybe like 2.25 there. And then not only that, but they're going to give me better overall just growth in general. So with that being said, guys, thank you guys all for watching this video. I hope this helps somebody else out there, and I look forward